Welcome to Smith Weekly Discussions, an occasional program for our members of Smith Weekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at Smith Weekly, including Sean M., Nick W., and Andy J. Tony Retta has returned to the program today. Tony is the president and CEO of Tectonic Metals, an Alaskan focused gold exploration company advancing a number of projects, including the Tibbs project, which is close by to Northern Star's operating Pogo mine. The company is listed on the Toronto Venture Exchange under the symbol TECT and also on the US OTC markets under the symbol TETOF. Tony, thanks for coming back to chat. How are you?
I'm doing pretty good. Thanks for having me again, Andrew.
Absolutely, Tony. It's a pleasure. Let's get your thoughts on the market conditions here, maybe just specific to the junior natural resource sector or broadly. Pretty tough environment for a lot of issuers out there. What are your thoughts on the market and how long do these current conditions last?
Oh, well, give me a sec while I look into my crystal ball and let's see what I come up with. To put it quite bluntly and honestly, it's ugly. You know, it's not pleasant times out there for a lot of the junior mining companies or even investors in the broader markets. You know, we have the broader markets sort of correcting or collapsing, pick whatever descriptor you like. And that just, is an anchor on us juniors or us resource stocks as well. So, you're kind of swimming upstream on that front. But with that being said, there is, gold that's, holding strong, and gold is a preservation of wealth, and the upside I think for the resource space is quite positive. There is a shift to going back to homegrown, and that when I say homegrown, that means sourcing your commodities, your resources here in North America for us, Canadians or Americans. And the major mining companies are doing the exact same on their operational front. There's a flight to safety, a flight to keeping things local, and I think that bodes well for us junior mining companies. The supply demand side also for the gold mining companies. Every day of production is that many ounces off of your books. And again, whether it's in the gold space or in the battery metals, critical metals space, people are recognizing that these tier one deposits or these mines don't fall out of the sky. We have to go back to exploration. So it is a slower shift, but nonetheless, it is a recognition by many people, many companies, and many billionaire investors out there that are saying, okay, let's go back to exploration and try to find these things. So the long term outlook is positive. We have to endure a bit of pain here, and I do think there is some a ray of sunshine on the horizon here. We just have to get through this next couple months of this uncertainty. But I'm definitely remain positive that there is a brighter future ahead of us, led by the gold price, led by the shift to stay homegrown, and also the recognition that we need to replace these ounces that are being mined and consumed, whether on the EV front or just even on the gold front. We have to keep exploring. We have to keep finding these.
Absolutely agreed, Tony. It'll be interesting to see how the next 6 to 12 months really play out here and seeing how the deleveraging comes off here in the broad market and seeing how commodities continue to do natural resource sector changes in price, response to inflation changes and cost escalations that we've seen out there. Well, last we had you on the program, it was December 2021. What has
Mhm.
been happening at Tectonic Metals and what progress has been made over, say, the last 6 months since we spoke?
Yes, so we finally received all our assays from last year's program. So those have been released and out to the public market. We found high grade gold at our Tibbs project, and in addition to finding gold, we've now taken last year's data, not just the drill results. That's what the market sees, or we put that out in a news release. But there's a lot of fundamental work that goes that happens behind the scenes that goes to generating, next year's programs and next year's drill targets. To that point, some of our other projects, we've relogged all the historical core, we've digitized it, put it into 3D modeling. We've played around with a different soil geochemistry. We've noted, different lithologies, what the preferential host rocks is, looked at our geophysical data. We've also brought in a structural geologist as well. And last year's drill results, all of that work I mentioned that was happening on the sidelines, has led to what I believe to be some of the best drill targets we've generated in the company's history. And that excitement that I have has also been shared by some of our largest shareholders. Crescat, who's advised by Quinton Henning, being one of them, our native partner in Alaska. So their excitement, our excitement, has led to us to pull the trigger on a financing that will allow us to go and drill these exciting targets. And that is kicking off. The first drill program is kicking off in 2 weeks.
Maybe just talk a little bit here on the current financing here that you guys are doing. This has got Doyen involved. I understand Crescat was involved on the prior
Yes.
financing. Talk about what the capital structure looks like pro forma, and how far do you see this getting the company? If you guys had to stretch and market conditions are pretty poor, how far does it get it? And then what does things look like pro forma here?
To that point, Crescat, our native partner, they've all increased their ownership in our company on this round. So Crescat's actually, the lead on this financing. We closed the first tranche, bringing in roughly 2 million out of the 3 million, and the proceeds from the $3 million financing is going to allow us to execute 2 drill programs targeting brand new, newly interpreted high-grade controlling structures at our TIBS and also at our 70 Mile project. We're going to also launch our first exploration program on our Flat project, which is our latest acquisition near the 45 million ounce Donlin Gold project, owned and operated by Barrick and Nova Gold. We're also going to be doing a metallurgical program at Flat, which we will believe will generate some positive news and further highlight, I should say, the potential for free milling gold on that property. So this financing will give us, our shareholders, a lot of exposure to multiple opportunities to create value for our company.
Where are we at on shares outstanding here?
Mhm.
And then also, can you speak to, as much as you can say, I mean, obviously we know Doyen and Crescat is in there, but can you speak to the major shareholders at this point post this financing?
Yes. Okay. So the major shareholders of the company, starting with that point, post financing, will be Doyon, and for those that don't, once again, our Alaska Native Regional Corporation that has, been supporting us for the last couple of years here, and also the entity that we've acquired a lot of our projects from. We have Crescat, we have Gold 2000, we also have Mackenzie Investments, RCF, and last but not least, the Tectonic team, sitting at roughly 14% ownership in our company. On a partially diluted basis, it's much higher. And collectively, those entities, we own 64% of the total shares outstanding. And currently, we're at about 190 million shares outstanding. Post financing will be roughly 200, 210, and 64% of that is held in very strong hands. And even if you backed out the funds, and let's just say the Native Corporation and Tectonic, those two entities hold 30%. So, the shares outstanding is one element, but I would also, encourage everyone to look at, who owns those shares and what's their agenda. Tectonic's agenda, Doyon, the native partners agenda. We're here to find a mine. We're not here to flip stock or, trade and make, 10, 20 cents on our paper. We're here long term. So those shares, in essence, will not see the light of day. And I will also highlight the insider buying that's been transpiring or taking place in the market as of the last 2 to 3 weeks. We've all recognized that we're at very low levels due to overall market conditions, not due to anything Tectonic has done. From our perspective, we've only bettered the fundamentals behind the company. So that's our pro forma, the shares outstanding, and then I mentioned earlier the use of the proceeds.
It's always good to see you guys writing some checks and continue to
Mhm.
write these checks as the conditions continue to be bad out there, and we'll see what happens. And of course, some of those company specific drivers that might take place here. But come back to the Tibbs project for a moment. Speak to what you want to accomplish with these funds that are coming in. What will be the focus at this point? Talk about how this is starting to shape up at Tibbs in terms of deposit characteristics here, and what do you see as the focus here? And what would you like to complete at Tibbs? Let's just call it till the end of the year.
Our focus at Tibbs is, we've done a lot of drilling. Well, when I say a lot, let me quantify that. We've done about 20 to 30 holes across, let's say 6 to 7 mineralized zones. And there's one in particular that has caught our eye for this year's campaign, and that's our Michigan zone. It's got 275 meters of drilled mineralized strike down to 250 meters. Although we were having success with the drill bit, such as 6 grams over 29 meters, 19 grams over 5. Those are great drill intercepts. Last year's campaign, where we did oriented diamond drilling, that's where you orient your core to get the exact structural orientation of which way the veins are dipping or striking. And that work, in conjunction with a structural geologist, in conjunction with our geophysicist, we've now identified that there could be potentially a new orientation hosting the high grade mineralization. And this, I'm calling it a new orientation because we're not sure if it is a structure or not, but this could be a controlling structure. And that, what that, in layman's terms means that it's the primary conduit for the high grade mineralization. And that will get drill tested this year, assuming completion of the financing, 3 million plus. And that could be potentially game changing. Because when I say high grade, Michigan has seen, probably about, 20 drill holes. And when we take the cutoff for the gold mineralization up to 10 grams per ton to highlight this new controlling structure, we have now over a dozen gold drill intercepts ranging from, at minimum, 10 grams, so that's the lowest, and as high as 104 grams per ton, and sitting in this new plane or this new structure. So we want to drill test that to figure out, okay, well, is this that controlling structure that we believe it to be, and just, what is the width and just how robust is it? And this is something that's never been drilled in this manner before. And so that's the outlay at our Tibbs project. But what's kicking off here in 2 weeks is our 70-mile project, which is a project that we've been grooming for about 3 years now, doing all the fundamental work to get to a point now where we've identified, similar to Tibbs or Michigan, a brand new controlling structure or shear zone, because it's a greenstone belt, that is feeding the tension veins carrying up to 185 grams per ton in drilling. So this new structure is going to get tested, when we're also going to be following up on some pretty exciting historical drill intercepts, such as 5 grams per ton over 15. So that's a bit of
Great.
the flavor of the program and the targets on the drilling front this year.
That sounds good, Tony. Well, let's see what happens with these, and hopefully some good results come out here and gets a little bit of interest around the stock here. How about you covered 70 Mile here? We talked about Tibbs, but come back to
Mhm.
Flat for a moment, because
Yeah.
this is definitely a newer project that you guys have been able to peel off, and it also seems to be a project that might have some pretty good potential attached to it. What's the plan at Flat here? Any updates, and are there any plans to do anything here on the ground before the end of the year?
Yeah, no, well, 100% we're doing work there. We've already started some of that work, which is, more in-house, if you will. So just to recap, Flats are our latest acquisition. It is situated in the same mineral belt as the 45 million ounce Donlin gold deposit. And what's exciting about this project, it's been sitting dormant for 25 years, sitting with our native corporation. It has been worked in the late 80s by Fairbanks Gold, which was created and funded by international billionaire Robert Friedland. And also, Placer Dome did 1 year worth of work there, and then a private junior exploration company did a couple of years of work. And that ended probably mid 1990s. And then, if you recall, 1997, Bre-X happened. The stock market collapsed. The Vancouver Stock Exchange, that stock market collapsed. So this project kind of got left basically on a shelf. And what they left behind was a massive golden soil anomaly. We're talking 4 kilometers. Tenor is north of 200 parts per billion. And they also left behind trenches and that were undrilled. So 6 grams per ton gold over 27 meters is one trench that has not been drill tested. And they left also behind 50 drill holes where pretty much every drill hole intersected gold mineralization ranging from a gram per ton all the way up to 200 grams per ton. Some of the best drill intercepts to report it from that property was 12 grams per ton gold over 24 meters. So there's some high grade gold, there's some lower grade gold, and our approach to this project, given that there has been 50 drill holes done already, is to start with metallurgy. Thankfully, our native partner has stored all of the historical drill core in a warehouse, so it hasn't been rotting in the field. And we've taken that core, we've relogged it, again, digitized all the data, spent some serious time trying to understand what's transpiring there. And we're looking at this project as we do with all our projects from a mining perspective. And I want to know answers as quickly as possible. I don't want to drill 20,000 meters and then find out, it's not economic or it doesn't work. So one of the biggest killers to a project, economic killers that is metallurgy. And Donlin, as we all know, is refractory. So this is not Donlin, it's different. It's in the fourth richest placer mining jurisdiction in Alaska. So there's a lot of placer gold that's been produced, and that highlights the potential that it could be free milling. But we also have two historical metallurgical tests that state anywhere from 82 to 89% gold recovery. So given that there's the core, we have some historical network in hand, we are going to start with metallurgy because I believe if we can further demonstrate that this project's free milling, we then get to contextualize what every ounce discovered means, or how significant is it, and that will also give us a 10x return on our capital. So a very nominal amount to de-risk this project significantly. In addition to that, we are going to get into the field first, boots on the ground, mapping, prospecting, exploration campaign in 20 plus years. And anytime you get to walk up to trenches or soil anomalies, or even where a drill collar is situated that's carrying 6 grams, 200 grams per ton gold, that to me is exciting. There's clear visibility that this is a multi-million ounce system, and there's not too many opportunities where you can acquire something and in less than a year or 2 years, providing that the stars align. That's metallurgy, capital. We can delineate our first ever resource estimate in a very limited time frame. So although markets such as the one we're in right now suck, they do leave behind a lot of opportunity where companies like us can acquire things, and sort of take advantage of what our previous explorers did, and we can use today's technology, modern thinking to advance assets such as flat. So this is extremely an exciting opportunity. Again, in our first world jurisdiction, near near what I believe to actually, and not just my words, but the largest undeveloped open pit gold resource in the world. This is Barrick and Nova Gold are spending $60 million at Donlin this year. And to have, just to be situated, within, say, a football throw of that property, a very strong football throw is pretty awesome. And, again, we have opportunities at Flat that would suggest even a free milling opportunity, but something that could potentially be a standalone, regardless of what happens at Donlin.
pretty interesting project and would like to see continued work here as you guys can. And obviously, like you said, you have to have all the stars align here. And one of those is capital, which is a big piece of that. So maybe let's just look a little further out. Let's assume that the market conditions are much better either later this year, Tony, or next year. Again, for some of our new audience and any changes to strategy, but cover off what the overall strategy would be for this company, going out a couple of years and where you'd like to see it end up.
Yeah, well, we can just, that's something we do quite often actually. So, look 3 years out and try to reverse engineer, the path forward. And obviously with the twists and turns and being tied to the capital markets, you're always pivoting, always. But, this year, worst case scenario, you mentioned even interest. I would say that there's a lot of interest in our company. The fact that we've raised $2 million already in this market, just coming back from the PDAC convention, people have, my fellow peers have a lot of them are struggling to raise, 200 or $500,000. So the fact that we have strong shareholders coming in and we've raised $2 million in what appears to be the worst market since say 2008 is phenomenal. And we also have interest from other mining companies and other potential partners. So drill program at 70 Mile. I can never guarantee, and nor should anyone sort of guarantee what the results are going to be. Mother Nature is proven over time over again that you can't predict her. She will humble you always. But so we put our best foot forward, and we're walking up to, again, like these targets that are manifesting 180 grams per ton in drilling. So I do feel confident. Anytime we pull the trigger to dilute the company, we want to make sure it's going to a cause that can generate 10x at minimum. And I believe 70 Mile has those characteristics. So that's part one of what's going to transpire this year. We talked about the metallurgy at flat. We do that. We are doing that, I should say. We are doing that. And again, that will allow us to either advance it ourselves or potentially bring in a partner at a much more higher valuation. And then, where I see with Tibbs as well as, potentially more discovery there, more high grade gold. Last year, we drilled 104 grams per ton gold. The market, kind of yawned at that, but that's significant. That's sign that there's something quite robust there. Our end game is to find a mine. So, all these projects, when we acquire them, they have a 3-year plan, and they have, we outline tangible, real deliverables each and every year. So this year, when we acquired Flat, for example, using that as an example, was okay, de-risk this with metallurgy. Then either raise capital ourselves or find a partner and go and drill the first ever resource estimate next year, or that's a pretty ambitious plan, and obviously, like I say, capital line, but that would be year 2, or continue to test the targets such as the trenches that I mentioned, or some of these other targets at Flat that have yet to be drill tested. That would be year 2. Year 3 could be the resource estimate. So you kind of see where we're going with these projects. We want to kill them as quickly as possible, and advance them as quickly as possible. But at the end of the day, you have to take dilution if you want to work your properties, and the only way you're going to find something is via drilling. So these are all great opportunities where we're starting right off the hop with scale, with grade, first world jurisdiction, shareholder alignment with the local, with our indigenous or native partner. And that's the kind of like projects we like to generate. We want to see visibility for a mining opportunity. And I don't want to find 500,000 ounces. I want to find 5 to 10 million ounces. So we play big. And that's kind of like, I can essentially see next year, for example, either partners working our projects or Tectonic continuing to advance them, all with exciting drill follow-up campaigns, and then resource estimates to follow if we elect to go that route. Sometimes resource estimations are not necessarily advantageous because they can be heavily dilutive, and they sometimes just tell you what you already know. So, my opinion too, I want to focus on, drill, making new discoveries and defining the limits of a mineralized system before I start getting into the granular drilling of the project. In addition to all the projects we have, every year we have, a few opportunities that crystallize and turn into new projects. And flat was the example last year. And, we have a few ideas also in the hopper. We've got to keep the pipeline uh, fresh and active, because if your objective is to kill or advance a project, there's a 50% chance these things are falling off the table, as they should be. You don't want to be spending time and money on something that it doesn't have visibility for a mining opportunity. So that's kind of the flavor for the next, the next 3 years here, for our projects in our company.
Very well, Tony. I appreciate you going over that strategy. And for potential investors who are listening in, Tectonic stands at about 10 million Canadian market cap. What would you say to those who are listening about the opportunity at this point with the company?
Well, what I would say is that we're right now, you know, sitting at a valuation that is below founder cost level. It's this is could say unprecedented in the company's histories, and the fundamentals behind the company have only gotten better. We've actually found gold on all our projects. We've added flat. If you look at last year versus this year, we've added our flat project, which I believe could float a higher market cap just on its own. We have shareholder support from sophisticated resource funds that, they're these, when I say resource funds, they're actually advised by geologists or engineers, essentially technical people evaluating the merits of our targets or the merits of our projects. And you will get exposure to two drill programs, a metallurgical and a surface program. And I don't know too many companies at the $10 million market cap valuation that are offering all of that. So there is, if you want to create value, you can, sit on your hands and just wait for the markets to improve, wait for gold price to go up, or you can actually go do something. And so, yes, we have it, the benefit of all what I said previously, but we also have the benefit of us trying to alter our destiny and actually, continue to find gold. Yes, that comes at a cost, dilution. A lot of people think dilution is a very bad word, but it's a necessity. You can't create value unless you're spending money inherently in some way, shape, or form. So I would tell all existing shareholders and potential investors to, sit tight. Management or the Tectonic team is buying in the open market. We believe in our company, and we're gonna, we're gonna create some wins here, and probably, is what I said earlier, one of the, probably the worst markets since '08. And in my investing career, my best returns have always been when I had the fortitude to step up and buy when things were at an all-time lows, or things were perceived to be quite dire. And I'll never forget '08. That was uh, one of those moments where, thankfully, I did have some capital, and I deployed it in probably about 10 junior resource companies, and I had the best returns I've ever had in my entire life. But that takes fortitude. It's not an easy thing to do, but that's where, real upside, I think, is generated.
Absolutely agreed with that last point, Tony, and it certainly takes some capital to be around and the ability to make those actions. How about the best way for investors to contact Tectonic?
Info at tectonicmetals.com is, our inbox line. That's a great way to connect with us, and also, our social media sites. We're active on LinkedIn. Myself personally, Tony Reda, that's REDATONY, and then also our Tectonic Metals LinkedIn page, where you see what we're up to. And I encourage everyone either to join those social media sites, or also just, join our email list, and you get exposure on again what we're up to, and useful, and the things of that nature. So that's the two best ways to stay in touch with us.
Well, Tony, we appreciate the update. Thanks for taking the time and good luck going forward here with Tectonic.
Awesome. Thank you so much for having me.